now of early retirement, which is wow. I can't believe it's been 7 years since I quit my job. I've now been retired twice as long as I had full-time employment. Well, that's not true. I guess I worked full-time through university, but um, crazy how I was able to kind of quit the job, go off on my own, and not have to ever work again. And then I'm going to share some of the experiences and things that I've learned along the way. Because it's interesting, my net worth, since I retired 7 years ago, my net worth has 11x'd. So I've had 1100% growth in the last 7 years, which is, again, because of some luck. I mean, let's be honest here, I went through a really good bull run, like 2017. Well, I gave my notice in 2016, but I actually quit in 2017, February. So we February, and I took a year off with my daughter. My daughter had just been born, and no, she was like 8 months old when I quit, something like that, 9 months old. But she was born, yeah, the year before that. But yeah, so it's crazy to think back of all the things that have happened, like the last 7 years. So 7 years ago, I was a millionaire. I was able to retire. I didn't ever have to work again. We had a nice portfolio of rental properties. I soon discovered that wasn't really retirement. That was like semi-retirement because I still had to like manage a manager. I basically had someone who's managing my properties, and I still had to check in with them, make sure rents were collected. Still had to file tax returns. It's a lot of work that goes along with running even a small business like real estate that's somewhat passive. And then I sold all my properties in 2017, 2018, I think 2018 maybe. And then I geared up and decided with a friend to do a whole growth strategy and joint venture partnerships. We got like 50, 60 properties, retired again. It's like I've gone in and out of retirement, and I'm at a stage right now where I'm just enjoying taking it easy right now. This year, 2024, has been more about taking it easy for me, doing things that I love and trying not to do things I don't love. We just picked up, again, like technically three motels in Florida and then a 23 unit here in Ontario as well. And it's like, I'm good. I'm full. Like I don't need to be going crazy. I don't need to be pushing. So a lot of what I've been kind of setting my goals around is like, what are the things, if money didn't matter, what were the things I'd be doing? Of course, money does matter, and I like to grow and I enjoy it. Like, I think I would still be playing the game of money. Like, I would still be negotiating on deals, and I would still be, having fun, trying to think of ways to have a creative outlet. Like, for me, I like to build things. I like to release my creative energies. I like all that kind of stuff, right? So it's really important, I think, to make sure. I should shut the furnace off before I did the stream. Sorry guys, there's gonna be a furnace like literally blaring out this vent here just as I'm going live. So apologies for that. But it's freezing out. It's negative 17 degrees Celsius, negative 17 outside. So it's very, very cold in Canada right now. And I'm excited to get back down to Florida. We'll be there. My daughter will do hockey tournaments here, and then we'll be going end of February. We'll be going for a couple of months back down to Florida. I was there already a lot this fall. I spent like October and November in Florida several times, you guys remember. So it's not that I haven't been there, but yeah. What else have we learned? Any questions you guys have, I guess, on 7 years of retirement and how that goes? A lot of people think that when you quit your job, like for me, it was really hard. I've been working 3 years full-time at a tech company. I was a manager. I've been promoted. I was an analyst, senior analyst, then a manager. I worked on blueprints for a living, so I wrote books is basically what I did. I wrote books with tools and templates that companies could go in and use to do things more efficiently. So that was what I did for my career, I guess, for 3 years. Pretty much, like since I was 19, I've been in real estate. So real estate's really been my career. Like I worked an 8 to 5, but from 5 until midnight and on weekends, I did real estate. So I learned how to renovate, I learned how to flip, learned how to do design, all that kind of stuff. And I enjoyed that way more. And I did not like having a boss. For me, like being on my own, having those risks, having days where like, there were days where I would work a 12-hour day and make negative dollars per hour. There's been days where I've made it negative $50 an hour. It's like I went and I worked hard on my property and I fucked something up and I lost $1,000. It's like that's part of entrepreneurship. Like there are days we get to go into work and you pay to go. You get less than zero. Some days you go in and you make nothing and it's like awesome. Like it didn't make any money today. And that's for some people who aren't like, how do I say this? The point I'm trying to get to is that not everyone's an entrepreneur. In fact, like 90% of people just aren't that way. They aren't wired to like, how do I explain it? Like when it's 10 p.m. at night and you're tired, or 11 p.m. at night and you're tired, and someone texts you something, a lot of guys just won't respond. A lot of girls just won't respond to the message, to the work thing. Like, oh, I can wait till morning. That type of person will fail at entrepreneurship. You need to be the kind of person that pushes sometimes. There are I can't think of any entrepreneurs that I know that, and that's okay, by the way, we're gonna get back to this and why I think, as an early retiree, you don't need to be an entrepreneur. You don't have to be. You could work a 9 to 5, save aggressively, and unlock early retirement. As soon as you stay up enough that you have 20 years living expenses, 15, 20 years living expenses set aside, you can go invest that in a relatively conservative portfolio of real estate and equities and private lending, whatever, and create a nice little fixed income / equities portfolio. They'll produce passive income that covers all your expenses. You don't have to work. Like, the math behind early retirement is so simple. It's like, I don't even talk about it on the channel anymore because I feel like it's just so damn basic, but maybe I need to make videos on it again, because obviously there's something missing in society when people, they just don't understand. Like, everyone I talk to is like, I don't understand how you can retire. It's like, well, it's really simple. Go work a job 60 hours a week, take 10 or 20 hours of those working hours and use that to cover your living expenses, get everything way down, live like a student, to live really frugally, don't take on a ton of debt, don't buy things you don't need, and invest it. And as you invest it, it starts to snowball. And in a big way, you start building up a huge net worth, and then you just retire on that passive income. Over time, if you do that for 7 years, math is simple. If you lived on like 20% of what you made, you saved 80% of it, in like 5 years, your portfolio is making exactly what you need in expenses to live. That's the math works. If you want to say 50%, I think the math's like 10 or 11 years if you invest in some real estate. So it's like, and I use real estate because it's a little bit higher return than the S&P 500, only a little bit, and that's because of leverage. It allows you to kind of get a little bit higher return. With leverage, it's important that you're buying the right kinds of real estate, the kind of real estate that debt services for you, making sure that the tenants more than pay the mortgage payments, because you do not want to be coming out of pocket to pay for your property. You want to design your business so your business is cash flow positive. A lot of people make that mistake when they're buying real estate, so don't do that. I'm gonna go to the Q&A, and then I'll go back to sharing, some more experiences about what it's been like for me. My many retirements that I've gone through over time. Like, I'm now in a position where, well, I don't spend a lot, right? We're quite frugal. I got 3 kids, but we are very, very frugal, and we still believe in house hacking. My grandfather lives with us. At times, my mom has lived with us. My dad has lived with us. We've had, my second born daughter's godfather lives with us. And so, like, we have a big family. Like, my utopian vision when I was younger was like, I wanted to build my own city. I want to have my own little town of like just awesome, badass people that weren't subscribed to consumerism and all of the negative mindset of society, and was like a lot of people grow up the way I did in poverty, and they come out as a communist, as a left-leaning person. They think like the system is broken, it's not fair, and so therefore I want to tear down the system. I was like, the system's not fair, it sucks being poor, I hated growing up in a single parent family, getting food stamps and all the stuff that we went through, and the the experiences that I had were like, the game sucks, but it's really easy to beat the game if you follow the steps. It's like, it's a meritocracy, in that those that really do perform, and I was lucky, I guess I was gifted with the ability, and not only the ability, like, I guess that's RNG, random number generator luck, that I was born with intelligence and a really good work ethic. And I think that's those, like, not only that, but like, if you're born with like the opposite of a silver spoon, I don't know what you call it, like a wood spoon or something like this. When you got that feeling inside of you that you're never going to be good enough. I was born with that. Like, I felt like I would never be good enough. Everyone always told me I was never enough. So you have that, like, you feel like you're never going to be good enough, and then you're always striving for more. But then at the same time, you also kind of realize growing up that like most people are, below you, in that like they can't compete at your level. You start realizing, like, when you work a 15-hour day for a couple of days in a row, you see how few people can keep up with you, and you're like, I have something here I can use to climb above. And so that was, for me, I forget where I'm going with this point, but just that, like, being an entrepreneur isn't for everyone, and that there is a way out. And for me, it was like, beat the game. How do I do that? And it's like, well, I love entrepreneurship. When I was a teenager, I had limiting beliefs though. Like, if you talk to 17-year-old me, I would have said, there's no way I can make $1 million a year. There's no way I can climb the corporate ladder to become a CEO. It's just not in the cards for me. Like, that, the statistics and the odds are against me. Like, I won't be able to earn that kind of money, but there's a good chance I can go out. Like, I would believe back then, if you asked me, I'd go out and make $70,000 a year. Like, I could make a decent average salary. I knew I was capable of that, and I knew I could work hard. Maybe I couldn't build a big business, but it's like the thing that I liked about early retirement in the beginning, and really the financial independence movement, because it wasn't a big movement when I first found it in 2009. So 2009, I was like studying it. I was reading the book Financial Independence, Retire Early. 2009 was like, for me, that was like a glass shattering moment. I'm sitting in my dorm room. I'm 17 years old and on a fluoride scholarship at Western University, going to the Richard Ivey School of Business, top business school in Canada. And I'm thinking that like I wanted to go on a business path career. And I'm like, wait, look at all these people who are in these like, partners at big four accounting firms and big five consulting firms and iBankers. And I would interview those people because that was what I was working on in that class, was trying to decide what I want to do with my life. And I would talk to these folks on LinkedIn that I would connect with when LinkedIn was just getting started. And oh shit, I didn't charge my battery. We're gonna have a short stream. We're gonna have another 20 minutes of this, 30-minute stream tonight. And I was talking to these people and I was like, none of them are happy. All of them are like on their second marriage. They seem like they're deeply unhappy. They work all the time. They're stressed. Their health isn't good. A lot of them are fat. I'm like, man, this is not the life I want. I don't want corporate Canada, corporate America. There's got to be something better. And like, freedom to me at its root is like the most valuable thing that you can buy. It's better than any stuff. The choice of what you do with your life. And the only way you can have freedom is if you have fuck you money. The FU money is the base you need. And it kind of came around to like, I can't control for whether or not I'm gonna be able to have wild success. And 99% of entrepreneurs fail. So 1% of startup businesses, people who start in entrepreneurship, actually succeed. So the chance of failure was so high. I was like, geez, I've got to build a fortress of solitude before I start anything in entrepreneurship. So at 17, I was like, I'm just gonna work as hard as I can. I picked up 2 full-time jobs. I was doing full-time school and I had a full-time job, several part-time jobs. And I just gotta save, earn as much as I can, start building up the early retirement portfolio. And it's like, the math is pretty clear on this. Like if I just follow this path and I invest in the S&P 500, I hadn't really found real estate at 17. I didn't buy my first property until I was 19. My second one until I was 21. It took me a while like to save the down payment for the second one. I didn't know any of the techniques that I know now about JV, joint venture partnering, and how to raise capital or how to creative finance deals or get the seller to finance you. I didn't know any of that stuff, right? Because again, like YouTube is even just getting started. There was a guy on YouTube, he's still around actually, Phil Pushivanoski, I think his name was. He was the first, the OG on wholesaling, and then he had like no followers back then. He was like the first guy. I remember like 2010, 2011, I was watching his videos and like, this is crazy. There wasn't even biggerpockets.com. There was no meetups that I knew about. Like Facebook was kind of around, but there was no groups that I could find online. Like there wasn't the social network that exists now where you can get access to all this information immediately. It was a lot harder, I think, in a lot of ways when I was getting started. And, I don't know what kind of wisdom I'm trying to share from this, but the idea is that like anyone can retire early if you just don't spend a lot of money. Work really hard and spend very little, and you guaranteed build a huge amount of wealth. That's just, the math is simple on that. And a lot of people fuck up in that they don't work really hard when they're really young, because by the way, every dollar you save when you're 17, 18, 19 is 60 times when you get to retirement. So if you can save $10,000, it's 600 grand in retirement. If you can save 100 grand, you're decamillionaire. You want to be a billionaire? Just crush it from 17 to 30 and do fuck all the rest of your life. Just work really hard from age 17 to age 30 and save everything you make and invest it, and you'd be a billionaire. It's like, if you just start early and work hard, you become extremely rich. And you get to a point where like I'm at this point now, I can't even spend, like unless I make a royal mistake. Like if I just put it all in crypto and it crashed, or I started doing degen stock trading, or I started putting everything into one basket. I mean, I could blow up my net worth, but if I was careful about it and I, practice some basic fundamentals of wealth management around like basic tax planning, basic diversification, if you put like 20% of your money into a really good balanced portfolio of like VU, your S&P 500, maybe a VTO, like a world index that owns a little piece of everything. US gets bombed, okay, because you own China. You own both sides of the war, so wars don't destroy you. If you own a really balanced portfolio where your portfolio is like, I don't know what the asset allocation would be, but you have to go do some reading on that, but it could be a percentage to like, even Russia, even a little bit of Russia, a little China, a little, United States, obviously. Canada's 3% of the world's global wealth, so you want some allocation for Canada, obviously. And if you're going to be retiring in Canada and using Canadian currency, you might want to weight a little bit heavier, maybe add some currency adjustment in case there's some currency issues. But you can build a really diversified portfolio. And then I would say put like a third of your wealth in that, and then take another bucket for like lending and real estate. And I don't like bonds. I would say bonds, but I don't like bonds just because like bonds pay 5% for risk-free. With real estate, I can get a 10 to 12% risk-free. 10% risk-free looks like, lending against a house, 50% loan to value. You pick a house in Toronto worth $3 million, you put $1 million mortgage on it in first secure position. So the property has to fall $2 million in value, which won't happen. Government steps in before that happens. So the banks would fail at around like 40% drop in real estate prices. The banks start to fail. So government has to step in and bail out. So it just doesn't happen. You can't get a 70% crash in Canadian real estate. It just, I mean, anything can happen, black swan events, but like very, very unlikely. And when that happens, you then take the property, right, for $1 million because you lent $1 million against it. And your choice is, if you lend really safely, you can get a risk-free return. And there are people out there, crazy as it is, that will pay you 10% right now, 10, 12% for risk-free money, which is, again, why does anyone do bonds? I don't know. I guess they don't have access to this. So get access to private lending. It's another great bucket. You should have businesses that you invest in. I think businesses are a great place to put a little bit of money. It gives you something to do too, a hobby. You know, what do you like? You like guitar? Invest in marketing and build a little guitar business. Build some videos on YouTube. Do something for your creative outlet, because when you're retired, you're gonna need something to do. Retired doesn't mean you do nothing. It just means you do things when you want, whenever you want. It's what it should mean anyway. Like you buy property you don't like, you can sell it. You know, you're not bound. You don't need that money. It's not like you get into a job. You'll try a job. You always want to try it. Maybe you want to be a guitar teacher or a piano teacher or something. You try that. Maybe the job gets tough. You don't like it. You just switch and do something else. You don't need the money. You're not doing it for the money. You're doing it because you love what you do. And fulfillment and autonomy and purpose are important. You know, you want to be good at something and you want to have the creative freedom to do that thing. So a lot of people get confused about retirement. And you know, when you retire when you're 24, like I did, it's totally different. Like I have a whole life ahead of me. I had 50 years of, you know, I have good genetics too. So I probably have 60 good working years left. Even now, I probably have 60 good years of like productivity left. And with advancements in technology and AI, I probably have 100 years realistically left of productivity, of things I can do. That doesn't mean I have to push myself. I probably do too much of that, but I should do less of that. 24 has been, you know, a New Year's resolution of trying to outsource more and do less of things I don't like to do. So that's been a reflection moment for me. It's crazy. I have been unemployed for so long now that I almost forget what it's like to work for someone else. I couldn't go back, I don't think. Calling my own hours is so important. I like that I can do that. Hey, David from Alberta. In a previous story, you mentioned Sonder Holdings. Your thoughts on entry point? Yeah, Sonder was down to like $2 or $3, I think, acquisition entry price. I'm trying to remember the price now. It was a good deal, I thought. But the problem with Sonder, the reason I didn't, I was joking you could go buy the company for like a couple of friends get together and we could buy Sonder, which has like thousands of units on Airbnb, and they do the re-rental strategy. That industry is just being destroyed right now. They're burning cash like you wouldn't believe. The company's hardly profitable. Most re-rental guys aren't actually profitable if they value their time, unless they get crazy scale. And at crazy scale, they have challenges with, like, no one factors in the capital depreciation of the furniture and the opportunity cost of the capital to grow the business. You have to spend a lot of money and upfront, like cleaning fees, unit turnovers, and painting when the people do damage. Like, if you want to be a good tenant, you have to take care of the property you're leasing. So the re-rental strategies are interesting. But that business is being done at scale. It was interesting the multiple they were selling at. And the reason for that is because they had a lot of debt. Their balance sheet was riddled with debt. So as rates fall, that could have been an interesting company to take private, I thought, but who knows? I did do some Instagram posts on that. And I thought that was a really interesting publicly traded company that was well undervalued, that even I could buy a large chunk of and be an owner in Sonder Holdings. So I thought that was an interesting one. Grinder says, hello, Mike, hope you're well. Would you refinance now to get more properties or wait till rates come down? You know, I think we are at a really interesting pivot point, especially in Ontario in real estate, where my forecast is we are going to grow between December and May of this year. So basically in the next 4 months, we are going to have a 24% annualized growth rate on real estate prices. So that's roughly 2% a month, between 1.5% and 2.5% a month we're going to get. Now, a lot of that's going to be driven by the general, seasonal, the normal seasonal swing that we get in prices for real estate. If you look at the historical data between like December and May, you typically have a 10% price swing. So some of that is the actual price swing and how houses sell much better when it's warm. No one wants to move in the winter. No one wants to look at a property. It's negative 16 Celsius out, so that's going to kill sales, right? Like all that kind of stuff is just destroys things. So that's at least part of it. The other thing is that rates are falling dramatically. Now, they haven't actually cut any rates, but the bond market has been pricing them for the last, from from November 1st to December 31st, we saw the largest, I think, fall that we've seen in like almost a decade. Like it feels a lot like 2008, the bring back down. So that's been interesting. And I've seen some recent promotions here in Canada for 4.89% 5-year fixed rate mortgages. We're seeing mortgage rates in the fours in Canada. Now that's a high ratio fixed subsidized by CMHC, but Canadian Mortgage Housing Corporation, the government of Canada, basically subsidizing and guaranteeing our house. Again, we have that institution in Canada that is set up to protect against housing downfall. Basically, the government protects Canadian housing. So Canadian housing can only fall so hard. Again, another reason why I love lending, because when you're in the equity position, if you're investing as an equity person, you can lose everything. But you invest in the debt position with a low loan to value, really safe, it's really hard to lose money. So that's super, super key, in order to Chung, how you doing? Thanks for the super chat. Chung is an old mentee of mine. That's fun. And a friend. Get a haircut and get a job. What is my job? What could I do? So like right now I make $1 million a year. I make a little under 100 grand a month right now. What could I was thinking about this the other day. I was like, and that's just from like living off my portfolio of returns. And I was thinking to myself, like, what could I actually do with my time? Like if I was thinking about that, like what could I actually do that would generate what my portfolio generates for me? Like my money actually works harder now than I can. Like what could I do that would pay me $1 million a year? Like if I went and worked at a 500 employee company, I was the CEO of a 500 employee company. Most salaries for a small to mid-sized business for a CEO is like 500,000 to $1 million. Maybe some stock options on the side. But like $1 million a year is I should be doing less, if anything. I should be focusing on the portfolio returns. A big fatal flaw has been trying to trade my portfolio. I need to stop doing that immediately. I need to be focused on. I need something to do, I think, with my portfolio. I need to optimize it. And I was thinking that I could do that in the stock market. The truth be told, like I have like 140 something IQ. I'm not smart enough. Like you got to be a super smart, and I don't spend the time reading and learning and studying, I think, the fundamentals of insider trading. That's a little bit of a joke there. There is probably some insider trading that happens in the stock world. But it's really hard to beat the stock market. It really is. There are very few hedge funds and folks that can beat the stock market. The only way to do that is with private businesses and private equity. I think you could beat it. But trading stocks in large, like the NASDAQ or like Apple or Google or big companies, I think trying to trade those guys, very, very difficult to develop an alpha or an edge. So for me, it's been like the realization that like, how should I spend my time most optimized? Well, one, the things that are most important to me are one, my family. Like above all else, my 3 kids, my wife of 15 years, those are important to me. So I want to spend make that my priority. Number 2 is like, obviously my extended family, my mom, take care of my mom, take care of my dad, take care of my brother, my family. Some of my family works in my business. So part of like why I'm still doing like growing, but why am I buying apartment buildings? Again, part of that is like personal satiation of growth. Like it feels good to grow, and like accomplishing things feels good, and growing and making more money also feels good. And not only that, but like if I have a year where I make there will be a year in the next 10 years where I make $5 or $10 million in a single year. It will be in a bull market when I've started to grow my portfolio. It's gonna happen. And on years like that, there's some cool shit you could do, like some new levels. It feels like a video game to me now at this point. Like my basic needs are covered. Like I have 100 years of living expenses at my current burn rate. We can't even deplete it. Like if I just got a 0% yield on my portfolio and I just left it in cash, we could live on it for 100 years. So like, if I can just get like a 5% yield or a 3% yield in treasury bills, again, like way more than I need to live. So it's like, that's been important for me. Like stop taking risk, Mike. If I take too much risk, that's the only way the only risk to my early retirement failing is taking too much risk. So I've got to make sure I manage risk correctly and effectively. It's a good use of my time. That's been like a mental note that I'm sharing with you guys, because it's something that I've learned is like, we as humans are super greedy and super horrible at controlling our emotions in business decisions. And so I think that's really important why a lot of the really, really ultra rich, they bucket their wealth into different places. They don't put it all in one business. They might during their growth phase. Like if I was spending 100 hours a week building my real estate business, it would make sense to allocate maybe 90% of my net worth into that said business, especially if I knew in that business I could generate triple the returns of the S&P 500, which has been historically my track record in real estate. when I focus my attention on buying, not holding long-term hold properties, but buying distressed buildings and stabilizing them and turning them around, that yield is really, really high. So it's like if I do more of that, well, one, I'm gonna get some gray hairs and maybe go bald because there's stress associated with that. But the yield on that, like I could double my, if I was really on it and I built a really good team, we could probably scale. And another challenge is scaling, right? Like as my portfolio gets bigger, it gets a lot harder to achieve said goals, which is again why I'm getting into bigger buildings, is because it's a lot easier to scale bigger buildings than it is smaller flips. And yet, I said this year I wasn't going to buy any more small properties. And my brother calls me, and as kids we were always. I have a couple of brothers, and one brother's a communist. Another brother who's just young. My dad got remarried again and he's 10 now. And then my other brother works with me in the business. He calls me, and he's like, he's Brandon, and he's like, Mike, he's like, I found this duplex in Sarnia. It's like 160 grand. We got to buy it. Like it's worth like 350. And I'm like, Brandon, we said we weren't going to buy any more small deals. And then I was sitting there and thinking about it. I'm like, let's go for it. Like I'll wrap the contract. Let's do it. So I just bought another small deal last week again. I got to stop doing that. I got to try to focus on the big stuff just because from a return on time perspective. However, like this one does really align to that in that like my brother's going to do all the work. So I don't have to do anything. It's really quite passive for me. So anyway, I forget where I was going with that point, but trying to focus my time effectively. And it's really hard when you get to the higher stages. Like a lot of these guys who are super like successful, like I'm sure like Buffett gets 10,000 opportunities sent to him a day. I'm sure there's like 10,000 different businesses that want to invest with him and want him to buy them and et cetera, so forth. And there's so much opportunity. It's hard to even you can't even analyze all of the opportunity in front of you. It gets to a point where there's too many opportunities. And that's like a challenge in and of itself. And that's something that in early retirement I've noticed is like when you free up your time, and some days I get like this, and this is why I keep buying properties and doing things, is because like, what do? You need to do something. And that's been a piece too. So if you're like me and you like to do things, then you need to line yourself up to let that creative energy out in a way that's productive towards your goals. And so trading wasn't a productive, like stock trading was not a productive use of my outlets. And so that's why I'm trying to wind that down and close those positions out. I still have a short that I've been slowly closing out on the NASDAQ. It was printing money today, but I've been waiting for a great exit point. A good exit, I think, for my short on the NASDAQ is going to be when we get a down month. So I'm just going to wait until there's a month where the NASDAQ is down. I will exit the position. As it continues to go down, I will continue to close the position out. I'm trying to not get emotional about it. The market can stay irrational longer than I can stay solvent. And I've accepted the fact that in competing in the stock market against, hedge funds, AI, quant, PhD folks, the smartest and brightest and most corrupt individuals, I can't beat them. And I definitely can't beat them with 3 kids and all the things that I have going on. I don't even want to. Like, to play at their level, let's say I was as smart as them and I could build the models that they could build and I could, have the staying power that they had, which I don't and I can't. But let's just say I could. Would I want to? I don't know any traders that have a good heart rhythm. Like, it's stressful as hell for all these traders I talk to, like almost all of them, even the really successful ones. There's a lot of stress, right? And it just doesn't work with my personality type. Like, I do well with real estate. I like that it's not liquid. I like that I can't panic sell. I like that I can hold it and it produces cash flow and I can think through and I can optimize it. And if it doesn't go well, I can put more effort into it and make it go well. Whereas if management doesn't do well, I can't change management. Like buying real estate and buying small private businesses, you have full control. You can go in and rip the management out and put new management in. You can, you can optimize the business. You can lean into it. And I like that control for myself. It's just who I am, just how I am. I'm not saying it's right or better, but sorry. No booger came out there. We got lucky. Just itching the nose. Steven says, off topic. I live in CT. Kids are off in mid-April for a week. 3 kids, age 5, 9. I was thinking of coming to your homeland for the first time, Niagara Falls, Toronto, Montreal, Quebec. What is best for kids? Also, everyone hit the thumbs up. Thank you for that as well. Yeah, hit the thumbs up. Let the YouTube algorithm know that you're getting some value here. Okay, so where's the best place to go in Ontario? Montreal is beautiful. If you don't speak French, it's a little bit challenging. The folks in Quebec are quite rude if you don't speak French. I do get by. I'm okay. So my experience there was not so bad, but it might be for you. I don't know if you're fluent or not. Niagara Falls is beautiful. Niagara Falls is one of my favorite places in Ontario. It's very touristy. It has a lot of really great things to do. They got some cool wineries. Obviously, the Canadian side of the falls is beautiful. Lots of cool things. There's like a theme park there. There's you do Googling for yourself, but I highly recommend Niagara Falls. Toronto's cool for a day. Toronto is like, I don't know. It's I don't love the culture so much there, and it's just very smoggy and busy. But it's cool to go to the CN Tower, and like there's the the zoo and the museum, the Ripley's Aquarium. There's some cool stuff to do there for sure. Ontario Centre as well. If you go, it depends what time of year you're going. You said April, so I don't think. Is Canada's Wonderland open in April? I'm not sure. I'm not sure when it opens up, but that's a cool thing to go to too. Canada's Wonderland's pretty awesome. But yeah, I mean, all great places. My favorite place in Ontario, if I'm gonna stay somewhere, is my cottage on the water in Lake Huron. Some of the cleanest, freshest, beautiful water, beautiful beaches. Feels a lot like the Bahamas, nice and warm. In the summer, there's nowhere better in Canada, in my opinion. David says, do you think the real estate agent industry will be disrupted in the future? And if so, how? Of course, I think every industry is going to be disrupted. AI, artificial intelligence, is going to crush every industry and change it dramatically in good and bad ways. And so I think in general, we're going to see that the value in real estate is no longer on the information. It used to be you had power, like the reason I originally got my license, I am a realtor technically. I don't really advertise to have any clients. I don't want any clients really. I like just doing my own thing, just working for my own buys and sells and stuff. But the thing that was nice about it was you had control over data. There was a time lag before things hit the market. Now things hit the market so quick, you don't really get that edge that you used to have. So access to information gone. Even now, they've fought it. The realtors fought it, but it's now public information what things have sold for. All that data is becoming publicly available and compilable. So the data piece is gone. All you have now, and even like writing good copy, I write really good copy. My descriptions were, I don't want to toot my own horn, but like I write really great copy. That was something that like I used to value in an agent, was someone who could write really great copy and could market properties really well. Again, that's getting replaced in a lot of ways, and there's less value in that. It used to be there was so many different fragmented ways and places you could list your properties. Now it's disseminated to the masses that anyone can really find any property. So yes, the real estate industry is being fragmented. I think in a lot of ways, commissions are going to come down. People will work more in volume. So technology will allow a realtor that used to be able to do 25 transactions a year to be able to do 50 now. Because again, you can do virtual showings now. There's less time to do everything. You used to have to drive checks to the lawyer. I used to go pick a check up from someone, drive it to the lawyer, drop it off, drive it to the brokerage. There was a lot of physical driving. Now it's like we do a great video tour. I can sell a property to someone never even seen the property. I've bought and sold properties completely on virtual tour. So it's like that saves a lot of time. When someone's already seen the property virtually, you may only have to do 3 showings now instead of 10 showings. So the number of actual, like the dollars per hour is getting way better. And so that should drive the gross commissions paid down and the percentage on properties down. Now, relationships are tricky because the real estate industry is very cliquish. If an agent doesn't like you, even, they might not work with you. Even if it's against their better judgment of their client. And oftentimes they will quiet offers from people they don't like. They will try to get you to pick one offer over another offer. There's a lot of that relationship, emotional stuff in real estate. And it's the same reason why I could buy Granny's house for 150 grand when it's worth 300 grand, right? Like it's not an efficient or perfect market. And for that reason, I love real estate. But for that reason also, realtors still have value, and that like there's so much emotion attached to selling your house that people make bad decisions not based on data. And so while the data is now free and information is now free in the real estate industry, a lot of it is emotional. And it's hard for a computer to convince you to sell the arm wire that they want in the offer, and they're gonna walk from the deal over an arm wire. Like some of the stupidest things that come up before that, it can be crazy. But relationships matter, and I don't like that fact, but it's true. People like to work with people they like. And so they might pay twice as much to work with someone that they like versus a computer that will list their listing for a flat fee. Stickman Finance says, recent sales looking like a bloodbath. When do you think rate cuts will occur? How much will properties rip up between now and end of 2025? Now, I've said this in a couple of streams now, but I think we're going to have a really, really hot spring. We might see a 24% annualized growth rate on the price of real estate here in Ontario. But I think that we're going to have another testing of a bottom into December of 2024. So I think we're going to have another little bottom. I don't think it'll be as bad as 2022 December was. That was the actual bottom. We tried again this winter to hit the bottom. We bounced off it. So it seems like we've kind of done this. So we're slowly making our way up. It will take, to recover back to where we were, I think it might take 3, 4, 5 years from the 2022 spring peak of when things were at their maximum frothiest. But I think we will recover that ground. Inflation will drive us there. You know, the government wants inflation and they want to see that happen. Someone wants me to pull on the string of my hoodie. My kids pull on my hoodies all the time. You want me to straighten it out? Is that good for you, DC? Is that happy? I'm not a fashion guy, I'll be honest. Like, I just throw on whatever and I wear whatever. So that's just part of FU money, right? Like, it doesn't matter. Who cares? Stickman Finances chatted with you today on Instagram. Talk about flat fee brokerages, blah, 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 even though offering 2.5%. Yeah, that stuff all happens too, for sure. Sorry, it's something in my eye. Yeah, I mean, definitely there are agents who will unethically take the opportunity to show a listing that they own, that they can double end instead of another listing. And if you don't offer the full amount of commission, they could often boycott your listing and showings. And agents have a lot of power and clients trust their agents. So for now, it is a challenge in the real estate industry for sure. Danny says, thinking of a challenge to start a business, work a cushy 6-figure job. I can't fathom doing this the rest of my life. Do you have any tips on how to escape? Man, so Danny, you got to start with, like, for me, it's always been about unlocking financial independence. And once you have that fortress of solitude, so if you're making a 6-figure job right now, the real question is, like, how can you start saving a good portion of that so you have a good cushion to build that business? Because there's nothing worse than trying to start a business and you need that business to succeed, to pay your mortgage and to eat. Like, that just makes it really, really tough to succeed in that business. So I found it really easy to be an entrepreneur when I was coming from a base of financial solitude, where, like, no matter what happens to this business, it fails or doesn't fail, I don't need, it's okay. And that's just me. That's what worked well for me. But I think, like, whatever you do, it has to be aligned to what you enjoy. And so, you know, if you're just going to start a business that's a 6-figure business and it's doing something you don't enjoy, and it's the same as the job you had before, that isn't really any better, right? Like, you're just now working evenings and weekends trying to keep your business afloat. So there's a lot of entrepreneurs that make 6, 7 figures. I know people that make 7 figures who are completely unhappy. There are people who make 8 figures a year, like 10 million or more, up to 99 million a year, who are completely unhappy, who don't have love, who don't have good family, who are on their 3rd marriage, who are struggling with all these different issues, right? Maybe they have substance abuse issues or they have health issues. Like, if you ask Warren Buffett today, if he would trade everything he had to go back 40 years, he would, guaranteed, to be 50 again. 100%, he would give $100 billion to be young again. So just remember that, guys, that, like, health and wellness are really, really important. And a lot of people who are entrepreneurs will sacrifice on sleep, myself included. Like, there was many a nights in my early 20s and mid 20s and late 20s where I pushed myself to do all-nighters to try to get a project done. And it was stupid. Like, don't sacrifice your health. Get better sleep. So yeah, that's my thought on that. Uber driver. Agreed. Trading is tough. It is very tough, for sure. Someone named Mike Hunt. That's funny. It's a good name. Good jokes. Randall says, didn't you lose $1 million this year? Randall, I did. Not this year. 2024, I haven't lost any money. I'm actually up. I'm beating the index by 7% so far this year. Again, trading is not, you know, you don't want to be, trading is rough. Trading is rough. It's hard to beat the market. I just happened to short the market in the strongest NASDAQ year since the dot-com bubble. In a 12-week run we had from October to December 31st, there was an 11-week win rate that was the largest we'd seen in decades. So that's what you call a white swan or a black swan. For me, it's black swan. For everyone else, it was a white swan. Everyone was invested in these tech companies. But the AI bubble, and yes, I did, 100%. And that's a learning lesson, right? Like, $1 million to me isn't that big of a deal. I mean, it is, but, like, it's not going to crush me. $1 million, it's not what it used to be. You know, $1 million in the 70s is like $10 million today, right? So, but yes, did I lose money? I for sure lost money trading this year, and it sucked. It really did. I'm thankful though that my gains in my real estate business covered all of the million. So I just made nothing last year, basically, is what happened. Now, I think that I'm wrong, obviously, but I thought the positioning of my shorts was pretty good. I still think the AI is overvalued. I'm not going to bet huge on it like I did, but I'm going to continue to close that short as we see a bit of a correction. I think that the NASDAQ's overvalued, but again, it doesn't matter what I think. It doesn't matter what the data says. Doesn't matter what the PE ratio says. Doesn't matter what any of the data says. If people believe that something is worth, I think a business should be 5 or 10 times earnings. But if someone believes a business should be 40 times earnings and they want to pay for future growth that hasn't happened yet, that's their right, Tulip mania. People were paying so much for tulips, they were trading houses for tulip bulbs that became worthless, right? Who knows where things will go? None of us really know with any degree of certainty. What we do know is that the government is designed to print money at a 2 to 3% inflation rate every year at a minimum. And so if you invest in things like real estate and solid tangible assets that produce cash flow, that service debt, over the long period of time, you will always win. And if you invest in every single piece of every single company in the entire world and build a really developed and, I guess not developed, but balanced, diversified is the word I was looking for, diversified portfolio of stocks from every exchange in the entire world. I'm talking China, India, Brazil, Australia, Canada, United States, all the G20. You want a little piece of every market, because if there's a war or something happens, there's always a black swan event. But if you own a little piece of everything, you cannot lose for the long term. And inflation will print you to freedom, to financial freedom, I suppose, or to victory in whatever pursuit you do. Just, again, like staying the course is super, super important, and having the staying power to do that. Randy says, hey, Mike, what size portfolio should one start diversifying beyond just putting everything into, say, VU? If you have $1 million, is it smart to put it onto VU? No, I think you should split it up into several different ETFs. I don't even feel comfortable having it all in one brokerage account. I would have more than one brokerage account, I think, even like 2 brokerage accounts, a little bit safer. I would spread it around. There's lots of different indexes, and there are lots of different ETFs that you could spread a little bit into. Like I would say having an allocation for crypto, as an example, might make sense. A little bit of Bitcoin, maybe a little bit of gold and silver, having allocations for real estate, having allocations. Your net worth shouldn't be all in one category unless you have an insane competitive advantage in that area. I can see the argument for like investing in your own personal business. If you could invest $1 into marketing in your own business and it could generate you $5 back, that's a 500% yield. I mean, that's a no-brainer. You should spend all of your money there, right? But yeah. Nancy Pelosi beat it for the last 7 years and had a full-time job. I mean, Jamie, to be fair, there was some insider trading going on there, I'm pretty sure. So can I beat her? No, definitely not. I don't have insider information on when and how different Congress folks are going to be voting and which bills are going to be coming in and what's going to be coming down the pipeline. I wish I had that information to trade on. Again, I can't beat her, so why would I try? I'm the sucker that she's going to make money on, right? So why would I try? Invest with her in the entire market, right? Yeah. Hey, Mike, do you plan on offering mentorship? Probably not worth your time for the monetary value, but curious. I do occasionally. I was going to have one spot at my lodge next weekend. I'm doing a little retreat with the boys, with a couple of my construction crew guys. And I was thinking about having someone come and stay in the master suite of my lodge on the water and learn construction and do a little mentorship for the weekend. I thought about pricing it at like $5,000 to have someone come. It'd have to be the right person because I don't want to kill the vibe of the thing. But occasionally do coaching. It's a horrible dollars per hour. I should be spending my time on $5,000 an hour activities, and coaching, it's just not a good ROI on time. I do it occasionally because it's a little bit fulfilling, but I wouldn't want to do it full time all the time. Courses make sense. You can scale that, but one-on-one coaching, in-person coaching, that kind of stuff, really hard to scale that business, and just not something I'm super, super passionate about. But I love the social media business. I wish there was a way that I could do it. If I had a running mate that wanted to help me grow a social media business, like a mentee that wanted to do that, I'd be open to that. Someone who wanted to collaborate on, do a joint venture partnership on growing my social media channel, I would be open to something like that. But I just don't want to do it by myself. I have so much going on, so many opportunities that, like, which ones do I choose to pursue, Social media is an area I should invest in, though. It really is. I have already a good sized following. I've been doing it for a long time. I have a wealth of knowledge. It'd be low hanging fruit to just pick that and focus on it more. aggressively. Have you ever thought of using money as an angel investor, investing in startups? I have, definitely. I'd love to be in the private equity space, investing in businesses. Just not rich enough yet, or not connected enough to be in those positions. But yeah, it's really cool opportunities for sure. Thanks, Music Z. Appreciate the question. Definitely, it's there's lots of those types of platforms exist. Do you recommend push-ups to keep yourself in the right headspace while trading? I do push-ups, but not when I'm necessarily trading. For me, it's really just about like, I don't want to have my money in the stock market. I would much rather have my money in real estate and lending, where I can get like a 50-60% almost risk-free return. So for me, that's much preferred. I can get 15% risk-free, and I can't do that in the stock market. If anyone could do the options wheel and get a 15% return, they would start a hedge fund and they would raise unlimited capital. No one can get 15% in perpetuity. So all those guys selling you the stock courses that say you can get 1% a month guaranteed no matter what, they're full of shit. Over a 25-year period, the number of investors that can beat the S&P 500, I could probably count on my hands and toes. There's very, very few investors who over the long period of time with a good pool of capital will continue to beat the market, because as you get bigger, it gets a lot harder to beat the market. The bigger your portfolio is, the harder it is. Yeah, I mean, maybe put a little bit of allocation to the FTSE 100. You pick the top 100. Some people say just investing in the golden 7, but again, a lot of the companies that were the biggest in the world 20, 30, 40 years ago are not even on the top of the list now. So the companies that are big now probably won't be in 50 years. So just remember that, guys, that the top 100 list often changes. And that's why we want to have a little piece of all the companies, because we don't know what the next company is going to be. And if you do, and you're a fortune teller, I mean, you're full of shit, but I would love to know. Hey, Mike, this question for you. When you're demonstrating numbers to investors, do you include property value growth over the next 5 years? You should definitely have the value lift and the appreciation in your total ROI calculation. It's super important. It's what gives real estate a huge edge over the S&P 500, is that you can collect like a 10% dividend from your real estate portfolio, and with leverage, get another 10 or 20% lift a year if you buy smart value add type buildings that beat appreciation of the natural market, because you're adding value and stabilizing the building over time. So it's like buying a business, and when you're in control of the business, you can get way higher returns than the S&P 500. No problem, Stephen. Happy to help. Thanks for the question. Viv says, how are your current projects going? They're going well overall. I've had a few stinkers through this opportunity of the lifetime. We are in a really good opportunity right now to buy. Like, I should be buying more properties. We're towards a really good bottom. Any project you started a year or two ago, going through this recession here in Ontario, it's been difficult. So I'm not going to pretend it hasn't. I'm thankful that we have great people, keep our costs really, really low. And so we're able to get through this. I have great liquidity. Like, I have millions in liquidity. So for me, the rising rates didn't hurt that bad. If I lose a little bit of monthly cash flow and I'm negative on a few properties because rates have gone crazy and I'm on a variable or something, that's okay. I have staying power. So my portfolio is kind of okay, and I'm glad for that. But yeah, we're gonna have a really good opportunity right now. People buying now are gonna have a great opportunity to unload the next bull market. So I'm excited about that I've held through that, and I have a position, a good sized position going into the next bull run. Hey, Will, how you doing? Looking for opinion, making 95 grand a year, living at home. That's amazing because you're saving all your money. We're in a recession right now. So I would say start dollar cost averaging again, especially in real estate. Real estate is greatly affected. I also think that bonds potentially an opportunity right now. I think rates are going to fall, so there's some real opportunity there. Everyone that renewed at high prices, low interest rates, having to renew at this rate is brutal. I totally agree, but it will drop somewhat. And at 4%, a lot of the real estate deals start working really well. At 8%, they didn't. And I think rates won't fall to maybe 1 or 2%, but they will fall to 4. We're already starting to see the high ratio stuff fall into the 4s here in Ontario and in Canada. So yeah, I'm really bullish on that. Big fan. I spoke about the 4% rule. So I need to talk more about that. I think that's more what the audience misses. A lot of you guys miss that. And it's been hard for me because, like, I just see it's so easy, I feel like, and it's also like 10 steps down the ladder. Like, I look back and it's like the frugality stuff is what got me here for sure. I built a really solid base and I used that to grow. But now, like, the frugality stuff doesn't matter as much because I make so much in passive income that, like, whether I save $100 on something or $10 at the grocery store, that frugal stuff is still in me. And I still do a lot of those practices, but I have way more impact teaching you how to make $1,000 an hour than I do teaching you how to save $100 a month. You know what I mean? Like, so I've just been focusing on the growth side, but you can't forget, like, frugality is super important, and living within your means is super important. Like, if you make $100, $50 goes into an investment account right away. The other $50 you find a way to live on. Like, that's a golden rule. Since I was 14 years old, I've been practicing half of what I had right into a savings account. When I was really getting aggressive, everything my investment account made and my rental properties made and all those entrepreneur opportunities, 100% went into savings. 70% of what I made from my salary went into savings, and 100% of my wife's earnings went into savings. We just saved so much and invested all of that. And the more you can invest, the less you spend early, the more it compounds. So, is there going to be a real estate crash next year? Tenzin, no. We're in a real estate crash right now here in Ontario. I don't think we're going to see a really big crash. I think it's possible this winter we test the bottom again. So we have a little bit of a rip this spring. We try the bottom again. We're not going to hit as low as we were. Like, I don't know if you can see that, but like we were worse in 2022, I think. It's not going to be as bad, I don't think. It could take till 2026 for the market to recover to where it was in the spring of 2022, which is the ultimate peak that we've seen in real estate prices. But ultimately, inflation is going to carry an immigration trends and supply demand equilibrium imbalance. Right now, they're not building enough. And housing starts are down big time, 25 to 50% in some areas. So they've stopped building because builders can't build profitably right now because rates are so high. Developers have put projects on hold. And what that does is create a huge supply-demand problem in the future when demand comes back and there's no supply, because there's a big lag between when they start developing projects and put the permit applications in and when they can actually build those units and sell them to people. So we have a huge lag there, and that's a problem. So there is going to be a demand imbalance problem in real estate in North America, like in Canada and the United States. We're going to have those challenges. So I'm still bullish. Is there possible turbulence in the next couple of years and a slow grind up? I think it's a very likely scenario too. So I'd be buying right now, 100%. I think there's a great buying opportunity right now. It's a good time to buy, not a great time to sell. This spring would be a good time to sell. So if you have properties and you can hold out to the spring, hold to the spring, I think it can be paid well for holding. How bullish are you on Bitcoin and ETH? So I have, full disclosure, I am long Bitcoin and ETH. I have those in my portfolio holdings, so take that what you will with bias, but I see Bitcoin at $100,000 a token. I see ETH at $10,000 a token in the next 10 years. I'm bullish on ETH, I'm bullish on Bitcoin. I think Bitcoin can get to $1 million a token in the next 20 years. But again, I don't have a large percentage of my net worth in that asset allocation. If Bitcoin goes to zero, I'm not gonna cry about it. I put a couple percentage points of my net worth into it. It is a bucket, I think, that we should have some allocation in. Everyone should have a hard wallet with $10,000 in crypto on it in case they need to flee the country quickly. And they should have cash and some gold and some silver coins. I have all of that just in case they ever need to, the world comes to an end and we need to go back to some sort of, escape. If we go to war or something happens, I think it's good to have a little bit of an emergency fund. And I think emergency funds shouldn't be at the bank because it's hard to get money from the bank if a world catastrophe happens. I think that's a very low probability. It's a black swan, but it helps me sleep at night knowing that I'm prepared for the zombie apocalypse if it ever does come. Probably not a good investment philosophy, but good to be prepared for all scenarios mentally. Good job for asking that question. Next question was a 300K house. I think it'd be a good idea to refinance the equity. I always think it's a good idea to refinance the equity if the opportunity for that pulled out equity can generate more than double the cost of that said equity you're pulling out. So you pull 100 grand out and it costs you 7% interest, that's $7,000 a year. If you can't invest that 100 grand into another property that will generate you 14 grand a month net and positive cash flow, then you don't do the opportunity. So it needs to generate safely double what it costs you to pull the equity out. And if it does, great. If you're someone who's going to borrow from your house 100 grand at 7% interest and put it in a treasury bill at 5%, that's stupid. You're going to pay 7% to invest it at 5%, you're going to lose money. But if you can find good opportunities, which in my line of work, I've been able to find those opportunities all the time. So that's been something that's been worked well for me. Leverage has really helped me grow and unlock new levels. And I think most entrepreneurs apply levels of leverage. It's important to ensure you have adequate liquidity and that you're investing responsibly. And risk management is so important. I've learned this lesson now with this trading that it's going to pay off for the next 50 years. And probably save me $500 million. So be thankful for the failures that you have along the way. Like when I lost $1 million on options trading, that was a learning opportunity, and I can apply that now into the future. So anyway, guys, appreciate you so much for tuning in. My phone is at 1%. It's gonna die now. I used up the whole 30% battery. I appreciate everyone who's tuned in, and we'll see you on, obviously Instagram, Facebook, follow my stories, at Mike Rosehart, you can follow along. And I'll see you next week, 7 to 8 p.m. Eastern Standard Time, every Wednesday. And yeah, thank you guys so much for watching. And the secret to unlocking wealth for you is 3 levers and control your financial future. Spend less, earn more, and maximize returns the difference. All right, guys, we'll see you next week. Bye, guys.